All right. Good morning. Good morning. Today we have Powell speaking in Congress. Should be pretty uneventful. He kind of steps in there with the mind that he doesn't want to rock the boat. So it's an old phrase I use: Operation Don't Rock the Boat. His entire goal is to open his mouth, chip his teeth, say a bunch of things, and when he's done, leave the market exactly how he found it without moving it anywhere. It's pretty tricky, sounds like. And there's been times throughout history where during these Senate hearings, the sitting member puts his foot in his mouth and says something that was unknown to the market at the time, or was taken by surprise by the market at that time. And there's been drastic moves from it. It's rare, it's uncommon, it doesn't happen very often. And the main premise right now is that he's not looking to do anything to get out a message, to drive the market, to do anything that is going to move things at all. So the expectation is a sideways market that waits for him to finish speaking and to finish with the hearings, and then makes its move for the rest of the day. So to be like a real boring sideways morning today, tomorrow, this is going to be very boring. Now I've seen different times, 10 o'clock. There's one right now that says 8:30. I heard 12:30. The reason it's changing around is he's got to meet with this committee. Everybody's got to be on the same page. They all got to be able to make it. So he's kind of getting bumped around a little bit, different time frames. Just kind of keep your eye on the news out there and try to find when he starts talking. It shouldn't be too hard to keep track of. The wholesale inventories today, it has the capacity to really rock the markets, but I just can't see it today having more impact than don't rock the boat. So this kind of gets that same point across. With Powell testifying, it's got a bright orange anticipated impact marker. If you look at wholesale inventories, yeah, it's really light, it's faded, hardly there at all. Now that doesn't mean that wholesale inventories can't surprise or, throw us a curveball or something like that. Of course it can. But generally throughout history, wholesale inventories are a yawn to the market. It doesn't care. Well, yeah, whatever. It doesn't hold that to the same level as something like Powell talking. Yeah. All right. So Asia had a pretty good day yesterday when it comes to the size of the move. If you look at say the last 3 days, and then you look at today's, they really had a big day. Now, at the end of it all, they still closed inside day. They had a really nice breakout, inside day breakout, headed to the upside, tied into some liquidity, and back down it went. So it's still in the range, not much farther away from where it opened in the grand scheme of things. But a big reversal on the day, certainly down a little bit. Lots of indecision candles here. Europe, on the other hand, all these wicks across the lows certainly shows where, the defense is coming in. solid resistance across the top. Europe still inside day at the moment. Decent recovery. So need to be watching this for a continuation, see if we can get that breakout. And crude back up to the top of the range. WTI and crude. We really don't have an expectation that it's going to break through the highs of this zone and continue on to the upside. But there was, some analysts at Goldman Sachs who said they were looking for, a leg up in energy, which would mean that we finally break out of this box and begin that move up. All right, volume is coming in a little light today. We're sitting at around 80. If we didn't know, that today had a lot of econ on deck, that might be a little bit of a surprise, but it's not a surprise because we know there's econ today. The range is relatively muted. If you think about the IB, implies that there's still a lot of work to be done. The IB is the first hour of the day. So still fairly muted in that regard. We are still inside week breakout, but just barely. If the idea here is that we're going to spend the morning chopping about, I want to kind of focus on the idea that we could start to see a little bit of that megaphone pattern. It's the idea that we get into a range and price hits the edge of the range, overshoots it a little bit, ends up setting a higher high, goes to the low of the range, overshoots it, ends up setting a lower low. And we continue to do that, widening the range into a megaphone pattern until finally something breaks. Either he finishes speaking or he says something that the market really doesn't like, and it breaks through that megaphone and finally kicks the move off. So while the range right now has a reasonably decent top, it's not really out of line yet, I wouldn't expect this nice clean box to stick around. I'd expect that it starts to get a little more sloppy as the morning wears on. Kind of take that with you as we come into the open today, that we could break outside of yesterday's range, wick out there, and then come right back in again, right? Whether it's through the top or through the bottom. There really is not a lot of expectation that the market's going to move around too much today and tomorrow, at least while he's talking. Now, once he sums everything up and he's done for the day, then yeah, sure, we have the capacity to continue to move around at that point. And, don't forget too, they're going to try to ask a lot of gotcha questions, that they deliberately are going to try to trip him up, make him say things that slanders one side or the other and makes somebody look bad while making somebody else look good. I don't envy the man having to go, and if you haven't watched those Senate hearings, you should do it at least once and listen to some of the really inane questions they ask the guy and the burden they put on his shoulders for the things that he's supposed to fix. And then they get mad at him that he hasn't fixed it yet. Point of control below us at 40.14. That's very close to a cog line at 40.11. Then the roundy at 4,000. It is the point of control, so there's every expectation that if we move in that direction, price will respond. It's not support. It's not resistance. It's just an area where we anticipate a reaction in price. We really don't have a great shape right now. With us sitting near these highs, we're losing that D shape. We're losing that slowly as we're beginning to build a little bit of a B shape. But we don't have that yet. It's getting there. When we're at the top of the box, we expect to go to the bottom. When we're at the bottom of the box, we expect to go to the top. We're at the top, so a break below 40.40 does put us into this shallow zone here. It's not a very wide zone, so if we did fall into it, getting out the other side of it, it's only about 20 to 25 points through the other side. The main takeaway is if we were to break through the low of yesterday, there's really nothing to catch us until we get down around that 40.14. Nothing to slow price down anyways. We don't have a VPOC, so there's nothing to build from that regard. We do have one overhead at 41.07 and one below us, 39.46. So the basic question, have we gone too far, too fast? And the answer is no. We're barely above the 10. That's the 10-day. And if we were to continue to make an upside move, there's a lot of room that we could make that movement to the upside. If we were to go to the downside, the fact that we're above the 10 means we could drop below the 10 and still travel 3.5% to 4% past the 10 before we would even consider that we're perhaps oversold. Same thing with the 10-week. We are just barely above the 10-week, not even 1% away. So we're not overbought. We have plenty of room that we could move to the upside. We are back above that anchored VWAP on the year. Now, this really doesn't have, too much weight at this point. When we first started trading the March series futures contracts, the differential between the SPX and the ES was something like 20 points. The spread was pretty wide. But you got to remember, when we were trading the March contracts, it wasn't March yet. It was the forward future price of where we thought the S&P would be in March. That spread is narrowed from $20 down to $3.03. Kind of widens. Sometimes it goes up to $4. Sometimes it drops a little, gets to like 3 in 1 tick. So the spread is really narrow. In 10 days, we're going to be changing contracts. We'll be on the June series. Notice that the June series is running at 40.93 right now. We will yet again have a reasonably wide spread. It's the June series, implying that this is where the market believes, this is where traders believe the market will be in June. Higher than we are today, but not significantly higher. I was looking at my scanners this morning, trying to get a feel for what's going on out there, because in this sideways market, there really just isn't a lot of movement in anything else. What we're looking at here is a high-low graph. Thinkorswim's got a tool called the high-low graph. And at some point, I opened up the tool and took the guts out of it and built two scanners, one for the low side and one for the high side. And what we're looking at here, when I turn these on, what I usually try to do is see which group is bigger. I'm not necessarily looking at the names in the group, not yet. I just want to see which group is bigger. And this morning we can see the plus side has 5 names, mostly healthcare, a staple name, and an energy. So really nothing down there. And they're boring staples and utilities and defense. And then there's the negative number, which is all of these. And the interesting thing of that is we can break it down into sectors and see that it's communication services, information technology, and consumer discretionary. And then behind that, we got financials. When we think about the risk on, risk off sectors, the risk on is tech, finance, consumer discretionary, and things that are like tech. So communication services fits into that. And the interesting thing is, like, Amazon is on that list. If you come in and look at it, Amazon is gapped up this morning. It's up 0.38%. And yet it showed up in the negative scanner. All right, UNG trying again. I'm sure we're going to see a number of false starts before this thing finally begins that long climb back out. This morning, it's still going to open inside of this channel, at least at the moment. So it hasn't managed to get out of that yet. It's very likely that all of this bottom is where it's going to do a lot of its base building. So I would anticipate that it's not done yet, has a lot of room to go before it starts to really come out of that. The KWEB constituents are down this morning. It's how we monitor those China ADRs. JD, BABA, Baidu, PDD. All right, so we're looking at Bitcoin proxies this morning, looking at GBTC Bitcoin. We've been using Bitcoin for like a liquidity measure. We can also use this to kind of gauge which group or group is really the only word that works. Which group within the Bitcoin realm space, which of those proxies are moving around? So things like Riot, Mara, Coin. It used to be that we would be focused on like high short interest names. The shorting is about done, cleaned out. Those short squeezes that we were seeing is really over. So we don't really have that anymore to kind of focus on. But we can use this for a proxy for a lot of those Bitcoin, kind of those smaller names. So when we look at this crypto list that I use on TrendSpider, it would, if we're looking at GB, I always get that acronym wrong, GBTC, we can pretty much use it for a proxy to represent all of these. That way, if you don't necessarily have this list, you can still just look at that one single symbol and kind of get an idea of the type of flows for these small little Joe Schmo no-name zombie companies. And then, of course, things like Riot doesn't really fit the MSTR, SI, CAN, Mara. And look at the moves that we had in there yesterday. They caught a pretty good flow. It's a pretty good flow. And take a look at finance yesterday compared to, say, NY Fang. So the Fangs, I mean, they were really holding up the market. If you look at the advancing versus the declining issues, got the S&P on the left, the NASDAQ on the right. The S&P went negative by around 1 o'clock, and the NASDAQ didn't get there until nearly 3 o'clock. Those Fang names just really tried to hold the line as much as they could before finally succumbing to the rest of the market. And we had a dominant green line all day yesterday. Certainly it didn't slow anything down for that midday push that morning push. But nice topping pattern tied in with that green line leadership. Fangs starting to weaken and sell off, adding to the rounded reversal through the whole marketplace. And finance already leading to the downside as it had been since around 15 after 10 yesterday. And if you look at the ticks from the time we opened through most of the day, those ticks were negative all day. In the later part of the day, it started to flatten out. And then maybe if we zoom in enough, we can see they just started to pick up a little bit. But the dominant move in the ticks were to the downside. So did we know it was going to flip over? No. I mean, you know, we don't know for sure, but the rally was certainly in question yesterday with that much negative breadth out there. What you want to be watching for today is a correlation of that breadth, called a high correlation coefficient. If you are looking at the S&P 100 and you're looking at the NASDAQ 100 and you have 99 or 98 names all doing the same thing, that's pretty much what the market's going to do. You start to lose that two-sided market and you begin getting what I call a consistent market message. That's when every single firm, institution, and trader are all doing the same thing, trading in one direction, and nobody's going the other way. I was talking about range a little bit ago. I think that range can absolutely extend all the way down to Friday's low and yesterday's high, and overshoot yesterday's high with a little bit of that megaphone that I was talking about. How we could get higher highs and certainly expand back down to this low, and we would still be in the range. $40.19 is a line in the sand. It's 50% of last week. Something to consider on the ES. And we have a market maker move this morning, nearly 0.5% with an ADR below 1.5. Tie those two together, it's saying the ES could easily move 2% on the day. Now we're basically flat. We're very close to where we opened last night. So it's talking about making a 2% move, even though half the day is already done. Now, you might not feel that way. You just woke up, you're coming in, you're getting ready for your day. But the ES trades 23 hours a day. It's been open since 6 o'clock last night. More than 12 hours have passed since it's opened. We're on the downhill of the trading day already. To make a 2% move now, with the time we have remaining, that'd be one heck of a move. But it absolutely can make it. So, these yellow and orange lines here, it's the ADR half, which would get us outside of yesterday's high. And then the ADR full would get us to the COG line 41.13, COGs at 41.11. Or an ADR to the downside, 40.24, and then 39.94. Well, 39.92 is a major significant level. So if we get that close, we're going to that level. And we would have to break through the weekly pivot point, which we are absolutely above at the moment. Remember, when we're above the weekly pivot, we maintain a bullish posture. And when we're below it, we maintain a bearish posture. That's all well and good until you're above the weekly pivot and then you're moving back towards the pivot. Hard to maintain a bullish posture when you're heading to the downside. Something to keep in mind, right? Those generic phrases and concepts don't fit all the time. As I mentioned last week, Monday, Tuesday, and Wednesday are very likely going to be opportunities for iron condors and, considering some butterflies maybe on the edges for Thursday and Friday. So 41.58 or 39.46. And be 41.13 and 39.77 in the SPX. Remember, we really don't expect him to say anything explosive or market moving. We don't expect him to come in with an agenda and move the market. So pretty boring. It's very likely going to be boring today and tomorrow. Just keep in mind, we do have jolts tomorrow, and then we're going to have job numbers again on Thursday, and then on Friday, we're going to have the numbers. And these numbers are very likely going to impact the market between now and FOMC on March 22nd. I don't think there's any other event between now and then as impactful or significant as the job numbers on Friday. They're going to be that big. Everybody be careful. Have a good